Hello, everybody. My name is Jesse Day. I am the host and producer of Commodity Culture, a YouTube program and podcast that covers investing in commodities and natural resources. I'm very excited to be joining you today from here in Novi Sad, Serbia. A big shout out to High Level Innovation for inviting me today. And we are going to be talking about innovation in sound money. We're going to be discussing silver, gold, and of course, the latest innovation in sound money, that is Bitcoin, the advantages and disadvantages of each of them, and why you should maybe consider diversifying some of your savings into these sound money alternatives. Before we dive into those, however, we need to understand our current monetary system and where it came from. An event in 1971 known as the Nixon shock was when Richard Nixon removed gold from backing the US dollar in a measure that he said was temporary. Now, there's a quote out there that there is nothing so permanent as a temporary government program. And this is certainly one of those situations because here we are today in 2025, and there is still no gold backing the US dollar. We have what's called fiat currency, which means by decree. Essentially, the currency we all use today is backed by nothing but the promises of the government and the trust of the people who transact with that currency in the government upholding its value. Now, what about prior to 1971? Well, from 1944 to 71, the world was under something called the Bretton Woods system. This is when most of the world's major currencies were pegged to the US dollar, and the US dollar was backed by gold. So for every dollar bill printed, there had to be an equivalent amount of gold in a vault somewhere. Now, under the Bretton Woods system, citizens could not exchange their paper currency for gold, but central banks and other chosen financial institutions could do so. This obviously led to some questions about the honesty of the gold that is actually there. But ultimately, it was better than being backed by nothing. But what about prior to 1944? Well, from 1871 to 1914, most of the world's major countries were on what is called a true gold standard. This is when citizens themselves could walk into a bank, hand dollar bills to the teller, and get an equivalent amount of physical gold handed to them. This is a much more honest way of accounting, obviously, than the Bretton Woods system, and certainly even more than the fiat currency system that we live under today. Now, with all of that history out of the way, I should also note that why in 1914 did the true gold standard come to an end largely? Well, because World War One started, and a lot of countries needed to print currency to fund the war efforts. So most people went off of the true gold standard. Several countries tried to get back on, sometimes with disastrous results. A very interesting time in history that I would recommend looking more into. But I want to get to the crux of our presentation today. And let's start by asking that very important question: what is money? I have listed here 6 of the characteristics of money. There are more. These are the ones I felt it was most important to talk about today. Money should be portable. Money should be divisible. Money should be fungible, meaning one unit is equivalent to the other. If I walk into a store with a $5 bill and somebody walks in with a different $5 bill, the clerk will recognize both as being worth $5. That's fungibility. Money should be a store of value, meaning it should at least preserve your purchasing power over time, so that if you stuff a $100 bill under your mattress, several years later, it should hold that value. We know, of course, that that is not true with the money system that we are using today. Money should be scarce. And of course, money should be acceptable. You need to be able to walk into a store or these days go to an online retailer, and they should be able to accept your money. So let's talk about fiat currency. This is the money that we're using today. As I mentioned, it means by government decree. It is backed by trust in a government. Fiat currency is portable, it is divisible, it is fungible, it is the ultimate in acceptability. These days, you can take your credit card and travel anywhere in the world or international debit card and tap it on any machine in pretty much any country. It will automatically convert the currency for you. Extraordinarily convenient, the ultimate in acceptability, no question there. However, fiat currency is not a store of value because of inflation. Governments can print and create currency units, and it is not scarce for that same reason. Now, the problems with fiat currency, of course, is that it steadily loses value over time. This is due to inflation. So I want to separate inflation and other price increases because prices can go up for a variety of reasons, a scarcity of a certain commodity, a geopolitical event, let's say the war in Ukraine, a major grain producer. Grain from Ukraine is no longer as accessible, and so other sources need to be found. So the price of grain and related products can go up. That's one example. There's many. But inflation is, in fact, the value of a currency dropping. Prices appear to be going up in such a scenario, but in fact, it is more money chasing fewer goods because the government's creating currency. One great example to use was during the pandemic when the government of Canada and indeed governments all around the world created currency units, sent people checks in the mail to stay at home. That seemed like it was great, but the problem is now you had all this extra currency circulating and the same amount of goods. And so that's just a supply demand imbalance. And so the value of the currency dropped. And for some reason, central banks around the world have a 2% inflation rate target. They believe that prices should rise by 2% every year. Now, getting deeper into that, inflation is also a form of taxation, a kind of a hidden stealth taxation. It's something you can look more into, but suffice to say, it causes fiat currency, to lose value over time. Fiat currency has major counterparty risk. For most of us, we aren't stuffing all of our cash under our mattress or in a safe in our home. We are trusting a financial institution, a bank, with our money. Now, many people would say, well, what's the big deal? I've been using banks all my life and nothing has ever gone wrong. And I'm not saying that a bank will collapse, but we tend to get in a bit of a bubble in the Western world that we live in and look at bank failures in places like Lebanon, bank bail-ins that have happened around the world, which is when the bank actually seizes depositors' assets to make themselves whole in the case of being under great financial stress. There is an insurance system in Canada and in many other countries as well that supposedly guarantees, I believe it's $100,000 in Canada. I might be wrong, but it's around there. Anything $100,000 or less in a bank account, if a bank collapses, if a bank becomes insolvent, the government will step in and make you whole. Well, that's true in one-off bank failures, but if we ever saw a systemic breakdown of the banking system, the government does not have enough money to make all the depositors whole in that case, nowhere near enough. Now you might say, hey, governments can create currency, so why don't they just print a bunch of bills, or in these days, push a few buttons on a keyboard and then send the money to everybody and make the depositors whole? Well, the risk outside of inflation is hyperinflation. This is when so much currency is created that it rapidly loses value and everybody transacting with the currency completely loses trust in it because the government's just creating it at will. In ancient times, it was adding different lesser value metals to the gold and silver coins. That was the way that governments would kind of inflate their currency or debase their currency at that time. But I mean, there's been some pretty dramatic examples of hyperinflation. Germany in the 1920s, over 29,000% inflation per month. Zimbabwe, over 79 billion% per month in the 2000s. Hungary, the highest recorded in history, over 40 quadrillion% per month. So this obviously can cause all sorts of societal issues, societal unrest, riots, starvation. I mean, all sorts of things because people hoard food because the prices are going up so much. So this is another risk that fiat currency introduces. And of course, it's heavily influenced by governments and central banks as well. The 2% inflation target, the government using fiscal policy, which is essentially a tool where they dictate taxation and different policies regarding government spending, and central banks basically having one lever, which is controlling interest rates. And in Canada, here it's the Bank of Canada. They control their rates, raising, lowering, keeping them steady based on supposedly what the economy looks like. It's a very crude tool. It is proven to not be effective, but yet they use it. And when they raise interest rates, for example, it can cascade throughout the economy. It affects mortgage rates. It affects the rates at which banks can lend to both personal customers and businesses and many other things. And it's a problem. So here's the main problem here's the purchasing power of the US dollar. If there's one piece of information I want to get stuck in your head today, it is this one. 1913 to 2021, the US dollar lost 96% of its purchasing power. Here in 2025, it's been even more dramatic. The US dollar is the reserve currency of the world, meaning that nations around the world generally use the US dollar to transact with each other when it comes to exchanging goods. And so if the reserve currency has dropped this much, you can imagine what the Canadian dollar or other currencies have debased by as well. This is a huge problem that not enough people pay attention to. We all know it instinctively. We all hear about and know about, well, in the 50s, Big Mac was 25 cents or whatever it was. And now it's probably $9, $10 at this point, Canadian. That is the collapse of purchasing power. And the fact that people don't question it is a problem. Now, here are the reasons to hold sound money. Number one, you remove counterparty risk. If you hold gold and silver in your own possession, you remove counterparty risk. With Bitcoin, this is very important. You need to self-custody Bitcoin, meaning that if you're buying Bitcoin online, generally people buy it on an exchange, Coinbase, Kraken, etc. In Canada, I think BitBuy is one of the main ones. You don't want to then leave it on the exchange or on that website. You want to because that defeats the whole purpose. You want to remove counterparty risk. You need to withdraw it using a cold storage wallet. This is very important. Sound money protects your purchasing power, generally speaking. We're going to take a look at this a little bit further. It protects and even enhances your purchasing power over time, as opposed to destroying it like fiat currency. It's an insurance against government malfeasance. Malfeasance just means wrongdoing by a public official. I do not know many public officials that do anything right, so I want to have insurance against them inevitably choosing the wrong path when it comes to the current monetary system and our fiat currency. So gold. What are the characteristics that gold has? Gold is portable. That 1 kilogram gold bar there is worth in excess of 100,000 US dollars today. Obviously not as portable as fiat currency. It is divisible in a limited way. You can buy gold in smaller denominations, in grams, in quarter ounces. This, in my opinion, carries too great of a premium to be worth it. So in theory, you can get smaller amounts, but in practice, 1 ounce, which at this point is over 3,000 US dollars, is the smallest denomination that I believe is practical to purchase. It is the ultimate store of value. It is the greatest protector of purchasing power and preserver of wealth throughout human history, throughout its 5,000-year history, being used as money by humanity. Of course, gold is scarce. It is not acceptable. This is a big one. You can't buy your groceries with gold. Here are some reasons to maybe think about gold when it comes to diversifying your savings. It's very likely to be part of any monetary reset or regime change because of its history as money. So when we look at gold as money, recent developments include the BRICS nations, Brazil, Russia, India, China, and South Africa. There has been talk of them creating a gold-backed currency, either for trade between member nations of the BRICS, which, by the way, has expanded since then. There's several other countries that are involved. There's other countries who are now petitioning to be part of this group. And there's a lot of talk about them using gold. They've alluded to it. We'll see what happens, but very interesting nonetheless. Nations are accumulating it rapidly. They are not buying silver or Bitcoin. This is something to keep in mind. Why are they accumulating it? For the same reasons that we as individuals should. to remove their wealth from counterparty risk and to protect their purchasing power. One of the events that sent shockwaves throughout the world when Russia invaded Ukraine, aside from the invasion itself, is when the US and its allies froze Russia's US denominated assets, such as US government bonds and US cash, because the SWIFT system is the global system of payments that most nations are using today. And with a few strokes of a keyboard, the US, in collaboration with its allies, froze Russia's assets. There's questions about them redistributing it to Ukraine, which is essentially theft. Whether you agree with the invasion or not, it's a massive violation of international law. And so all these different countries started looking around and saying, hey, if they can do that to Russia with the stroke of a keyboard button, they can certainly do it to us. And who knows who the next political enemy of the United States is going to be. Maybe we should get physical gold and store it within our own country. The only way it can be taken then is through military invasion. So this is a very important trend to be watching. Central banks of governments around the world are stacking gold like crazy, perhaps because they also see a monetary reset, monetary regime change up ahead. As I mentioned, best inflation hedge and protector of purchasing power known to humanity, and it's still viewed by money as money by many non-Western cultures. China and India chief among them, by the way, making up the majority of the world's population. Turkey, Vietnam, and others. These are countries where both citizens and governments view gold as money and they stack it in times of economic turmoil and uncertainty like we are experiencing today. So in the Western world, we live in a bit of a bubble, but if the majority of the world is looking at gold as money, maybe it's time we woke up and considered it as well. Let's talk about the gold price. So this is gold since 1971 when Richard Nixon removed gold from backing the US dollar. It is appreciated by 9,300 plus percent over that time. We can see it spiking dramatically more recently. This is a very clear indication of dropping value of the US dollar and fiat currencies. Gold tends to run counter. So as a currency gets debased, the value of gold goes up. A lot of people would say gold's not rising. It's actually the value of the US dollar and other fiat currencies dropping dramatically. But nonetheless, we can see how well it has preserved and enhanced purchasing power over that time. Let's talk about silver, often called the poor man's gold. Same 5,000-year history as money. Silver is portable, less so than gold. It is divisible, more so than gold. A 1 ounce coin is worth north of 30 US dollars at this point in time. It is fungible. It is scarce. It is not a store of value in the same way that gold is, although this is debatable. The reason is that silver is much more volatile. It can violently spike up and collapse, as we will see in the silver chart up ahead. And of course, like gold, it is not acceptable. You cannot use it to buy groceries. Now, reasons to consider silver, and perhaps to be cautious as well. It's unique in its hybrid role as both an industrial commodity and monetary metal. It is one of the most used industrial commodities. Every form of electronics uses silver. Silver is the greatest conductor of electricity that we have access to in our world. It is used in a variety of medical uses. Its use in solar panels is increasing. This makes it potentially mispriced to the downside at the moment. According to the Silver Institute, we are in our 5th year of consistent silver supply deficits, meaning not enough silver is being mined to meet rising demands, and this could eventually be reflected in the price. It's more affordable than gold if you're starting out on your sound money journey. I think silver is the perfect place to start, although I think gold is a more important asset ultimately to hold. Just get your hands on a silver coin first and foremost. There's something about our evolutionary psychology that I believe is wired to recognize gold and silver as money. And when you hold that first silver coin in your hand and you feel its weight, I think you will instinctively recognize that this is real wealth. It's much more volatile than gold, which is the reason why there should be some caution warranted. Uh, People sometimes look at it as an investment as opposed to money in that case because it can rise dramatically. but just be aware of that fact. It's much more divisible than gold. So for those ultimate preppers or doomsday preppers, it's much more useful in a Mad Max scenario. The electricity grid goes down, the government's collapsed. We're in a situation where you need to barter for goods and services. And so because of its smaller denominations, uh, it's easier to barter with. You couldn't go with a gold coin worth, in that sort of scenario, probably worth $10,000 and buy groceries or trade it to your friend, your farmer for some eggs. Here's the silver chart. As I mentioned, extraordinary volatility. This is 1980. Silver rose to $50 an ounce. This was a bit of an anomaly, an event known as the Hunt Brothers Silver Squeeze. It's an interesting event in silver history. I recommend looking into it. But we can see here in 2011, silver also spiked to almost $50, but collapsed dramatically. And this is why caution can be warranted. If you bought up here, you're still waiting to break even today at the current price of $32 US, particularly adjusted for inflation. $50 adjusted for inflation, even $50 in 2011 today is over $100. So certainly something to be aware of. But when we look at its total gain, once again, going back to 1971, when Nixon removed gold backing from the dollar, it has risen by over 1,600%. So not bad if you were able to hold throughout. So now that brings us, let me just double, yeah, now we're on Bitcoin. All right, this is the innovation in sound money. Before I dive into Bitcoin, I want to make a point here in that there's a lot of individuals out there who think that Bitcoin is going to be the new money of the future, that forget about any other asset, gold is dead, just put all your money in Bitcoin, number go up. I don't listen to those sort of people. In fact, I flat out don't trust them and think that they're being deceived. They're not being honest with you because nobody knows the future. You cannot predict what's going to happen. I think Bitcoin is a very interesting technology, and let's dive into it here. It's the ultimate in portability. Why? You can actually carry Bitcoin across international borders or anywhere with a list of words in your head. This is because when you first get a cold storage wallet and you withdraw Bitcoin from an exchange, let's say you buy it online, your wallet will generate a seed phrase. This is a sequence of 12 to 24 words, which is the actual keys to accessing your Bitcoin. The Bitcoin is not actually stored on the wallet itself. It's stored on the blockchain online through this seed phrase. So if you're able to memorize your seed phrase, you can literally destroy your cold storage wallet. Let's say some extreme scenario where war is breaking out and you've got to run out of the country. But if you're carrying gold or silver with you, you might get it seized. People might take it off you, whether that's the government or other bad actors. In this case, you could just memorize your 12 or 24 word seed phrase, destroy your cold storage wallet. And then when you arrive at your destination country, you could either go online using a hot wallet, less ideal, but that's one way to do it. Or you could buy another cold storage wallet and then input your seed phrase and boom, you've got access to your Bitcoin. So it's the ultimate in portability. It's the ultimate in divisibility. The smallest unit of Bitcoin is a Satoshi. I believe it's worth 0.0006 cents US approximately. It's fungible. It is scarce. In fact, it's the ultimate in scarcity. Only 21 million Bitcoin will ever be created. This is built into the Bitcoin protocol, the program that runs Bitcoin. I believe the last Bitcoin is set to be mined in 2140, somewhere around there, but that scarcity is built in. When it comes to gold or silver, the more the price goes up, the more previously uneconomic deposits, because sometimes there's a lot of gold and silver in the Earth's crust, but a lot of it just isn't economically mineable. Because as we saw, silver's $32 an ounce. Well, if it costs $40 an ounce to mine that silver, then that deposit is just written off. But if silver goes to $50 plus, suddenly you have, more silver that comes online. The same idea with gold. With Bitcoin, there's no such thing. There's only 21 million no matter what. Bitcoin is not a store of value because of its extreme volatility. It's much more volatile than even silver. Again, this is debatable, as we will see when we look at the chart of Bitcoin. It is not acceptable, but it is much more acceptable than gold and silver and becoming more so. Of course, Maybe some of you have heard about El Salvador, where they made Bitcoin a national currency. I believe that's changed, but nonetheless, you can still use Bitcoin anywhere in El Salvador to buy goods and services. Panama has now started opening up to using Bitcoin more. A lot of online retailers accept Bitcoin. So we're nowhere near fiat currency acceptability, but it is growing day by day. So some reasons to consider Bitcoin and some reasons to be cautious. It's the scarcest form of money, as I mentioned, with a supply cap of 21 million. It's still very speculative and unproven. This is a point of caution. It only has a 16-year history. Now, it's done very well over that 16 years, but a lot of questions remain. It's much more speculative than gold or silver, and I would treat it as such when it comes to diversifying your fiat currency into these sound money alternatives. It's incredibly volatile, but it has outperformed everything since its existence. I think you'll be shocked when you see the chart. It's the ultimate in portability, divisibility, and is extremely difficult to confiscate, again, because you can just memorize that seed phrase or get that seed phrase and have that be that is your keys to accessing your Bitcoin. So very difficult for somebody to take it from you. I want to put a line in the sand here between Bitcoin and cryptocurrency. Yes, Bitcoin technically is a cryptocurrency, but all of the other cryptocurrencies are not 100% decentralized like Bitcoin. They all generally have a group of people or even a single person that can be influenced by governments. With Bitcoin, there's nobody to make a phone call to. So, the president can't pick up the phone and call the head of Bitcoin and tell them how it's going to be. And here's what you got to do. Ethereum, the second most popular cryptocurrency, they can do that with Vitalik Buterin, the man who made it, and the Ethereum Foundation, who, by the way, pre-mined a bunch of Ethereum and gave it to themselves when they launched it and made themselves millionaires. So that sort of scandalous sort of activity cannot occur with Bitcoin. Um, this is the Bitcoin chart. I mean, we're only going to go back to 2011. It's been around since 2009. It's up over 8 million% since then, but I mentioned its volatility. You can see these huge spikes and drops, huge spikes and drops. You have to really have the stomach to handle this volatility if you're going to hold Bitcoin. In that sense, you need to be honest with yourself and say, would you have sold here, for example, only to watch it rise further? For myself, the way I treat Bitcoin, I take self custody and I don't even care what the price is. I'm just holding on to it for the long run because I believe in 5, 10, 20 years from now, Bitcoin's going to be worth dramatically more than it is today. Uh, Over 8 million%. If we go back to its inception in 2009, it's up billions of percent. I mean, there's no other asset in the world like it. But once again, like I said, it's still speculative, still early days. So a lot of things to consider when it comes to Bitcoin. I very much appreciate your attention today. You can find me on YouTube at Commodity Culture. You can follow me on Twitter at Jesse B. Day. My website is jesseday.ca. And go ahead and send me an email. I really wanted to dive deep today, so I've run out of time. I don't have time to take questions. But if you have any questions about today's presentation, hit me up at jesse@jesseday.ca. Just put high-level innovation somewhere in the subject line so I'll know that it came from this conference. Once again, thank you so much to High Level Innovation. Thank you to all of you for joining me today, and I hope you got some value from this presentation.